Hello everyone, this is Martin. It is now June the 14th, and welcome to another soggy edition of this week's upcoming currency pairs. I mentioned soggy just because it's a really rainy, crappy day today. All this past week has been up and down, rain one day, nice the next day, rain the next day, and hopefully this won't dampen your spirits when it comes to making your trading decisions. And let's see what we've got on store or on tap for this week, and we're going to start with the Euro USD pair. So again, here we're looking at the Euro USD daily. You can see price with this huge candle did break major resistance, and we're in basically in an uptrend. Last week price did come down and basically said watch for price to either come back down lower to retest the previous support, or wait for a break above the 111.80 right here. And price with this huge bullish candle did actually break the 1180 mark. And also notice, everyone, that this is a bullish engulfing candle. It completely engulfs the previous black bearish candle. So you could have entered a trade at the open of the next candle right here, and you would have made some pips, depending if you're watching the charts closely. If you weren't, then price is now almost at the same place as where you would have opened it. But again, right now price is breaking, price is moving sideways, and what we want to do is we want to wait till price breaks the 113.30 mark on the, toward the upside. Basically, I'm not too sure if the uptrend will continue. We are will continue. I've got check marks here. I'm not too sure, but what we can do, it's an if and a wait and if situation. If the price breaks above here, then price will go up higher to retest the previous major resistance up here, or you can just wait for price to break below the 111.80. It has to break and close below the 111.80 for a sell trade to the downside. You can see I've drawn in some channel lines, my lower trend line in pink, my upper trend line. So price is either going to come back lower and then bounce up, or price is going to go up and bounce back lower. But right now we're kind of sideways. It's a wait and see, so we want to wait for a breakout either to the upside, a break above the 113.30, or a break to the downside, 111.80. Okay, and MACD is just it's above the zero. You can see that right here. So the next chart is the British Pound USD daily. Okay, last week I mentioned that price was consolidating within a triangle. You can see I've got the two lines here, and price would either break up out of the triangle to the upside or to the downside. And I also asked you to watch for a break above the 154.50 area, which was right around here. With this candle, price did break above the 154.50, and if you would have gotten in at the next candle, you would be in the money right now. Right now, price, I'm going to basically say that price is going to continue to the upside. However, wait for price to retrace. Wait for price to pull back a little bit to this area right here, and let me just draw that in. So price is there, wait for price to come back, and then take a buy trade to the upside. That's what I would do with this pair. Okay, so wait for some sort of retracement, maybe 50% retracement on this candle right here, and then take a buy opportunity to the upside. I believe price is going to continue going at least up to the 156.80, and if price breaks above that, then we're going to retest the previous high. You can see that right here on the chart. Okay, so buy dips. We are in an uptrend. The MACD is above zero. The next currency pair is the AUDUSD. Okay, with the Australian USD daily, we are in a downtrend, and last week I said wait for price to come back. Price was about here. Wait for price to come back all the way up for a retracement. I did say wait for sell at a rally, and price did come back all the way up to retest the previous resistance in this gray rectangle. You can see that right there. Last week, on Friday, you can see Friday's candle was a engulfing bearish candle. This completely engulfs the previous white little candle here. It's just what worries me just a tiny bit is see this long wick on this bearish engulfing. That means the buyers are protecting their territory, pushing price back up. So price did actually come back down. Buyers came in strength and push price up, and that you can see with the long wick over here. However, overall, I believe we're in a bearish mode, and just wait for a retracement, maybe back up to the 77.50, 770.7770 area. Just wait for a bit of a retracement, then take a sell trade to the downside. Or you can wait all the way until price breaks the 76.05 here, and price should come back down lower to retest the previous lows. But again, I think a good idea would be just to wait for a retracement, a bit of a retracement, then take a sell trade to the downside, as we are in a downtrend and MACD is below 0. Okay, so next pair is the New Zealand USD pair. Okay, everyone, this is an interesting pair in the sense that last week we were right here. Price had broken down below the March 2011 low, and I did say that price was going to go back up and retest the support, and price, in fact, did go all the way back up to a previous major resistance area, as you can see in the gray rectangle. And then with this pin bar, bounced back, went up a little bit higher, was rejected by the sellers, brought back down. You can see that, and that's with this large pin right over here on that candle. And then something interesting happened. Price was up here at this area, and price jumped or gapped down all the way to here, and then went down further and went down further again. Now, the reason for this gap is because the New Zealand government lowered their interest rate by 0.25%. And that came out on economic news on the, I think it was the Wednesday. So once that happened, price just plummeted. Sellers came in en masse and pushed price all the way back down. I believe price is going to keep going down eventually all the way to the 6,800 area. However, because price did break down below with this kind of strength, I believe price is going to go back up and retest the previous resistance, or it was formerly support, now it's resistance, as you can see with this gray rectangle. So I believe you should wait for price to come back up and take a sell trade, or basically sell rallies, or wait for a breakout and just sell below this bar, like below the wick here, somewhere here. You can take a breakout sell trade, or just wait for price to come up a wee bit to retest the previous resistance. Then you would have a stop loss just above here, but that would probably be your safest bet. I believe price will be going down. Okay, so again, just taking a look, we're looking for a retracement up to here, and then take a sell trade to the downside. Okay, and finally, okay, not finally, but we've got the US Swiss franc next. Okay, with this pair, last week we were in a sideways consolidation. We were right about here, so just going sideways. And I did indicate two different important levels. Watch for a price break below the 92.50 area, or a price break above the 95.60. This currency pair just went sideways, did neither, did not go down lower, did not go higher. So again, this week we're still stuck in a sideways consolidation. Okay, we're waiting for price to break out and close below the 92.50, or waiting for price to break out higher. MACD is just a wee bit below 0, so again, this is a wait and see situation. Fairly easy currency pair to track right now. Just wait for a breakout. Okay, and the next pair is the USCAD. Okay, USCAD. Last week we were right here at the support, and I basically said just wait for price to bounce off the support to see if price would go higher. In fact, price broke down below support and plummeted right down to this next major support area that I've highlighted in the gray rectangle. So price has come all the way down. It actually closed below the 50, and this is kind of a false breakout because right after that price did move to the upside with a lot of strength, and then came back down to close above the 50. Now, the previous candle, the one that closed below the 50 simple moving average, you can see that price was driven all the way down below, and buyers came in strength and pushed price back all the way back up to here. So that's shown by the long wick, and this is kind of a pin bar. The next candle is another bullish pin bar. Buyers brought it all the way back up, and sellers came in and brought price back down, and that's indicated with this pin, the large shadow on top of the smaller body here. Again, another shadow or tail above the body here. Again, sellers are coming in at this area right here, letting me know that sellers are still kind of in control. I mean, from here down to here, sellers completely control the movement of the price for this pair. Buyers tried to come in. They are trying to push price higher, but these large pins above the bodies are indicating that sellers are still in control. And for me, a good idea might be to take a break, buy trade a break above the 123.55, which is right here. If price breaks above that, price most likely would go higher to retest the previous resistance right here. So again, it's a wait and see situation, or just wait for a complete break below this area right here for the price to continue to the downside. Right now we've got mixed signals, not too sure. I mean, we're kind of going sideways, but we want to wait to see if price breaks above the 23.55 or breaks down lower. MACD here is above the 0. Okay, and the next pair is the US Japanese yen. Okay, last week we had actually broken the June 2007 high. Price did go up quite a bit, and then sellers came in en masse and brought it right back down here, and then price went right through previous resistance, which is now support, and plummeted right down to make another low area right here before coming back up. So price went broke the June 2007 high, and last week I said wait for price to come down and bounce off this area, and look for bullish evidence to the upside for price to keep going higher. It actually did not. It actually broke through the support area, as you can see with this gray rectangle, and went down and retraced a lot more further than I thought. But that's still normal. It was just an impulsive retracement or pullback all the way down to this area. And so for this week, it's what I'm basically suggesting is wait for a breakout either to the upside or to the downside. For me, I would wait for price to break above the 124.80 right here. If price breaks above there and closes above there, then we could look at the buy opportunities to the upside. If price breaks and closes below the 122.50, then we would take a sell trade to the downside. So in this case, price is still going sideways. We're waiting for a breakout either above here to the upside or here 122.50 to the downside. MACD is well above the 0, and I kind of think price is going to go sideways for a bit. So again, it's just waiting for a breakout, either upside or downside. Okay, and what I mean is wait for price to come up to here. So we're either going this way or wait for price to come back down and then take a sell trade to the downside.